It's August the 21st, 2015. Time to wrap up our trading day and trading week. We came into the market this morning wanting to sell 24s, 25s. Didn't quite make it. We had basically the buy zone was 2000 to 2012. We had 2000, 2002, or 10 to 12. And we said there was a 15 might actually hold. The easiest trades to see again with no news coming up was this head and shoulders figure, this pattern that we've got. Triple S is up here, and it was also a mean green trade, and that led to the first winning trade. This S that we took live in the room gave us really quick 3 to 4 points. This is a pretty good example of why you shouldn't trade for about 5 minutes after you put that first trade on. You're really prone to taking risk. You've just made money. But we got long off this Vienna's bar. We had terrible trade location. The market rallied up, just stopped us into our position, came back, stopped us out. Now the correct trade was, place for the stop was 3 ticks under that bar's low, and if you had your stop correctly placed, it was a nice winning trade too. Market comes down, fails at the top, starts to sell, just nothing but winning trades. Off the bottom right here, head and shoulders, this buy produces a winning trade, then back to the well. Retest failure, a buy right here, a small winning trade, then back to the well. And we had identified that the 82 to 75 area was the next support for the market, and there we find ourselves. So really heavy selling across the board. Idea was to be short. The level we missed by 2 points. And again, this idea really serves you well for most of the day. So pretty good day trading in the E-mini, all things considered. Which way is the market headed come Monday? Usually after a big day like this, we can anticipate a pause day. We've had 2 really hard, heavy down days. Not much news on Monday to drive the trading. So if things are quiet and if we don't bust the market real early, the most dangerous setup for us would be a gap down opening coming into the market on a much lower opening out of London. That would set the stage up for a pretty nice rally. So lower high, lower low. F1 screen says find a place to sell it. Again, just looking at the market, let's kind of fun to see this kind of volatility. And it's really fun to see that the market is selling. I mean, we might get back to where we can make some sense of the market and get the volatility we need to make the E-mini work the way that it can work. Definitely dealing with B's, new distribution down. L came right out of the middle right here of this high volume area. So the market is slowly moving lower, and you can see that we're making new territory here on the 180-day information. So if the market's going to close at 77, 80, 82 would be sell 1. And with this extra volatility, let's make it 85, 87, sell 1. And then sell 2 will be in the 90 to 95 area. You got to open it up a little bit with this kind of volatility. On the buy side, 70, 72. Then 65 plus or minus. No news to speak of on Monday. We have Atlanta Fed's Chicago Fed's National Business Activity Index. So now if we can't get it above 80 in London, and then we're going to take a short at a lower level. But given the volatility and the ability to manipulate prices in a thinner market, we'll open it up a little bit to the downside. Everybody wonders what in the hell China's going to do. We've had 2 days of heavy selling here. China's market, I'm pretty sure, will be close to a 10% correction when they open up, and if the selling continues there, which it's likely to do because the United States is the dog, and the rest of the world's equity markets are the tail, as it still stands these days. Follow through selling overseas. So if this market's going to turn, London and Monday morning on our market is where it might open. Okay, F1 on our on the note says higher prices. We've got two distributions, both of them are P's. So if the E-mini is lower, we're going to be higher. If the E-mini is higher, we're probably going to be lower. And failure to take out this 28 area to the buck, we sell one, and 3 to 7 will be sell two. The market hasn't rallied with a lot of momentum or a lot of steam today. It's already had a pretty good rally so far this weekend, so the big guys are telling us something. Last trade was 22. We have this breakout from 18, so 13 to 17 buy 1, and 5 to 9 buy 2. So the option market makers in yesterday's play was 128 to 129 and closed at 128.16 would have been the mathematical close today. So they're out a little bit. They roll these positions, and as long as they have access to capital, they do really well. But at some point they don't have access to capital, and it comes in quiet periods when there's absolutely no volatility, and to cover the overhead, which expands exponentially, they put on more and more positions, and then one day they find themselves, when the volatility explodes, out of their own capital, cut off from borrowing, and they're out of business. And that's a pretty regular occurrence, and that for option market makers, very lucrative. You can almost mint money for a while, but you get killed on volatility. And you get killed because you need, like everybody else, you need or want the income. You get used to living the way. So we got ourselves I would print this screen right here for a D pattern. We've rejected prices above 160.20, and we've rejected prices below 159.20. So we didn't have a lot of range today in the day session. We're looking back to 1 point plus trading days, which is a little more comfortable. There was about a month here this summer where you get 2 to 3 point ranges. So we're going to sell failure to take out 12 to 16, then 23 to 27. And on the buy side, the bottom of value is the buck. So 29 to 1, buy 1. And buy 2. We'll make it 17 to 21. And the knob spread, we're kind of in the middle, but it looks like it's trying to trade lower. Not conclusive. Okay, gold, like treasuries, is a flight to quality, risk-off type investment, and it's still pointed higher. I don't know what's going to happen in Japan, what's going to happen in China. Don't know what China's going to do with their currency, but if you're long gold, you probably aren't going to give it up until you see some stability in the markets. So higher low, higher high, find a place to buy it. And we're dealing with a P. We've rejected prices above 65. We were adjusted at prices below 50. So got an 1150, 1165 market right now. So the first sell was our number 2 sell today, 60 to 62, sell 1. 65, 67, sell 2. On the buy side, I'll make it 50, 52. Give it a little bit of room. And then 44, 46, pick up this area right in here. Well, crude made it below 40 bucks as we had envisioned, and it bounced back to close over that on end of the day, end of the week short covering. So the issue is that can we take out 33, and if you believe in costs corrected for inflation or dollars, depending on $1980, $2,000, whatever it happens to be, crude's definitely cheaper than it was in the 70s and 80s. Okay, lower high, lower low, find a place to sell it. And right here you can see we've got a pretty clean break in the market, 50 to 75. So we'll make 50 to 75, sell one. And 41, 41 and a quarter, sell two. On the buy side, 39.75, 40, which was at 40 was our number 2 buy point this morning. And then 39, 39 and a quarter for buy 2. Okay, it usually takes 18 months when the bottom falls out of the market to find its for the selling to be over, everybody to be washed out that's going to be washed out. And that would be December of this year. So we're getting into a window where prices are so low. It doesn't mean that people are going to buy it and run it up. It just means that they'll stop selling it. And that's an important distinction that you have to, when we have these explosive moves where the whole market readjusts prices. What you'll find is a long period of pause. The selling or buying is over, but it's not, you're not bringing the opposite side of the market in yet. And looking at the euro, I don't think anybody gets out of their euro positions. Got out of them today. I mean, what the hell is China going to do? I think they, currency intervention-wise, I think they were in the market at least 3 times this past week, maybe 4. So this 1400, 1540. I mean, pick your spot. Getting through 1400, there's 14 and a quarter. 1450, 1475, then there's that low volume number at 1540. Market has pointed up. I think I'd like to sell the 14. If China doesn't do anything, I'd sure like to sell 1400s. They just have to be going nuts in Brussels and in Frankfurt and all those other places. The best, deflation is what we're fighting, and with the price, with what's happened in crude oil, what's happened in copper, meats are off a bunch. What's happened in farmland in the United States, what's happened to crop prices in the United States, even with that catastrophic ethanol program that will never be gotten rid of, in my opinion. Prices for all commodities are lower. Okay, 1375, sell 1. 1400, sell 2. Our sell zone 75 to 1400. If China does something with the currencies, we sure as hell don't want that trade. And the breakout came from the 35 area, so we'll make 20 to 30 buy 1. Then the buck buy 2. And folks, that's it for the week of August the 17th. My goodness, so, 2 more weeks of summer and end of football season. Cool. I can turn my TV back on. I watch 1 football game a weekend. That's the time that I give to it. Sometimes 2, but rarely. That's too much time to be in front of the tube for me. Better things to do. I read a lot. Y'all have a great weekend. Thanks a bunch for joining us this week. Oh, you had snow there in the mountains. Cool, Reg. We're in, like I said, this when I went out and got my hair cut, the 73 degrees, which is probably about 17, 20 degrees below normal.